Hello viewers, here I will explain you about Heikin Ashi candlestick. Heikin Ashi is Japanese word and its meaning is average bar. Heikin Ashi is very useful for traders. It helps the trader to take precise move. Many traders regularly use Heikin Ashi candles to get appropriate results. But different traders have some different understanding over same candles. Now you will have question that how Heikin Ashi candles are formed and how it is used. Don't get confused my friends, I will explain it as simple as I can. But before that, if you are new to our channel, then hit the like button and subscribe our channel, so you can get these types of informative video regularly. First of all, understand how Heikin Ashi candles are formed, in the other words how it is calculated. To get the open of Heikin Ashi candle, addition of open and close price of previous Heikin Ashi candle is done, and after that it is divided by 2. It means open of the candle will be the middle of the previous candle. But for the close of Heikin Ashi candle, addition of open, close, high and low of current normal candlestick is done, and then it is divided by 4. High and low of Heikin Ashi candle is same as those of normal candlestick. Here we can see two different charts. This is Heikin Ashi chart and this is normal candlestick chart. Both charts are of same stock. But you can see the difference. In both the chart the trend is in downward. In simple candlestick chart, there are some green candles, or you can say some bullish candles. So, during the observation of trend in real time some difficulties occur. These green candles can make confusions. But when we come over Heikin Ashi chart we can see that during whole downtrend, candle remain in same color, it means trend remains in red color throughout whole downtrend. So, trend can remain in continuity for small period. And chart can be seen as so clear and stable. Now let me introduce different types of candles, and I will explain what are the meaning of their different shapes. As you can see here, there are green candles which have very less or no wick at the downside. These all green candle has wick on upside. These all are bullish candles, and they indicates continuous strong uptrend. It shows very less or no sellers in the market throughout these regions. Now over here you can see lower wick starts to come on these bullish candles. It indicates that the trend is going to be weak, and generally when sellers start to enter in the market then these kinds of candles are formed. What other thing we can see here is that the body of these candles becomes smaller, which shows weakness of trend. Now understand same thing for downtrend. As you can see here, these bearish candles have very less or no upper wick. It indicates strong downtrend. It also indicates there are many sellers in the market throughout this region. And the candle which have no upper wick shows there are no buyer in this region. When you see red candles are formed with upper wick, so understand that the downtrend is becoming weak, and now buyers start to enter in the market during this particular region. As downtrend become weaker, body of the stick becomes small. Now sometime you will see these types of candles. These are called doji candles. These indicates the speed or momentum of the trend is gone. And now there can be a possibility of reversal of trend. Reversal do not occur at every doji candle. Sometime doji candle indicates short-term stability in market, which you can see here. After that trend start to continue. This was basic of Heikin Ashi candles. It was required to understand basic things to make different type of trading strategy using Heikin Ashi candles. Now just find at which point price is going to be pause, or at which point pullback in the direction of trend occur. So we can enter in the market. Now the question is how we can get proper judgment over trend. So here we will take the help of moving average. Moving average is the average of closing price of the candles for specified period. For example, if we plot 20 moving average in chart, it will be the average of 20 candles. If we go for 1 minute chart, then one candle represents for 1 minute. In the same way for 1 day chart, one candle represent for 1 day. As you can see, we have plotted 3 moving average over here, 20 moving average, 50 moving average, and 150 moving average. You can notice here as we enter higher moving average, the curve of the moving average is going far from the price trend. 20-minute moving average curve is nearer to price trend and 150 moving average curve is far from price trend. Generally, 20 moving average is preferable for short term, 50 moving average is preferable for medium term, and 150 moving average is preferable for long-term trader. Now we understand our trading strategy. Here we will take 50 moving average. If the price trend is above 50 moving average, it will be called uptrend, and this uptrend is used for buy setup. Similarly, if the price trend is below the moving average, it is called the downtrend, and this downtrend is used for sell setup. For the buy setup, we will require 2 bullish Heikin Ashi candle, and there should not be lower wick on both of these candles. And second condition is these 2 candles should be just after the pullback. As we understood before, these types of bullish candle which have no lower wick indicate strong uptrend, and there are no sellers at this point. It is the clear sign of buyer-dominated area. In the same way, for the sell setup, we will require 2 Heikin Ashi bearish candles with no upper wick, and these candles should come after pullback. These types of bearish candle indicate strong downtrend, and it also indicates strong seller-dominated area. Now I will show you trade example. Here the price of the stock is above the 50 moving average, so we can make buying setup over here. As we discussed before, we have to wait for short-term pullback. Here we can see there is a series of bearish candle. Just after these candles we can see 2 bullish candles with no lower wick. Thus, it indicates the buyer has started to gain the market. So, this is clear sign to make buy setup here. We should put our buy order above the upper wick of second candle, and our stop loss should be below a first candle. Our target must follow 2:1 risk-reward ratio, or we can exit at nearest resistance. Similarly, for sell setup example, we have 5-minute framework chart of a stock. Here the stock price trend is below the 50 moving average. So, we can make sell setup in this region. Same as before, we have to wait for short-term pullback. Here we can see a series of bullish candles. Just after these candles there are bearish candles with no upper wick. It indicates that it is seller-dominated area. So, it is a clear sign to make sell setup here. We should put our sell setup below the low of this candle, and our stop loss should be high of this candle. Our target must follow 2:1 risk-reward ratio. Or we can exit at nearest resistance. For our respected viewers, I teach strategies which experts don't teach easily. So give many likes to our video and subscribe our channel, so you can get our upcoming videos fast and regularly.